morning, traders! Welcome to the weekly ElliottWave Street Update. I'm Juan Maldonado, and it's a pleasure to share our views for this week. Also, don't forget to sign up for the free webinar I'm doing about volume profile. Please find below this video the link to register for this fantastic event. Alright, let's start with the euro. From a higher time frame perspective, like the daily chart, I'm looking this week on the euro to find a reversal. Last week, the plan was to have a leg down to this area, to the 119.50, and check what was going to happen once the price moved to this area. Sometimes the price can just visit the target zone, the ElliottWave target area, reverse. Sometimes we can just have a tail under the support, like a hammer, for example, and the price reverse. And some other times we can have a deeper attempt to start a bearish market below support. And that's the case. This is the case we are seeing today on the euro. The price trying to start a bearish market. So of course this one is the most complex and the most risky, especially with the strong dollar and all the things, fundamental things that are happening today. So let's talk about the validations, because that's the next question. When we should start thinking that the wave 4 is done and is ready to go to the next target. Last week my target here, 119.50, right? This week, my target here. Well, not sure if the euro is going to reach during this week the level, because it could start doing a 1, 2, 3, 4, 5, A, B, C, 1, 2, 3, 4, 5, A, B, C, 1, 2, 3, 4, 5, and that could take some time. Sometimes it's quick, sometimes it takes a lot of time. Well, it depends on the market speed, but well, we will take care of that later during the road, right? But on the euro, we are seeing the price starting to lose momentum. You know, it's starting to smile. And here, this is an important area, and the trend line. You should add this trend line on your chart. All right, so my plan for this week. We need to have the 1, 2, 3, 4, 5 sequence. All right. Then actually I can call this now the wave 3. It's fine, and this is the wave 4, right? And then a double bottom here. All right. So let's say that we have the leg down, and then the price starts reversing. But what if the euro already finished the market cycle? Well, if it starts breaking this high, that's an alternative, you know, in case that this is the completion of the wave, and we have a wave 1 above this old support now acting as resistance, and then the wave 2, that's where we can start going long at the end of 2 or at the top of 1. And don't forget the trend line. It's really important. So that's my strategy to find the end. On the other hand, in case that we have these crazy days, something unexpected, for example, a huge red candle, I'm not going to trade it. Make sense? Validation is key. If you want to have the complete follow-up day by day on the euro and all the currencies, make sure to start your ElliottWave membership, ElliottWave Street membership. Let's have a look now at the gold, and then we go with the S&P. Gold is one of my favorites. Look at this pattern. Oh, I'm getting ready a free candlestick course, so soon you are going to know about it, okay? But look at this beautiful thing. We have the piercing pattern, a candle that closes 50% above its previous candle. The next candle is key, this green one, because it's able to move above the 2 candle formation. this could be the end of wave 4 on gold. My first target, the previous high, 1740. And in terms of triggering the trade, we can go long now and leave the stop loss below the low, or we can wait for a bounce, for a retrace that fails to make a lower low and reverse. Let's say we can add internal trend line breakout there. Could be an additional validation, wave 1 and 2. Or some traders like to wait for the wave 2 and then leave a buy stop order above wave 1. So around the ElliottWave wave counts, we can build different strategies to validate the end of the waves. But we need to have at least a simple strategy to validate, at least a candle formation, something that tells that the market is changing, in this case from bearish to bullish, because some traders try to apply the ElliottWave theory without validation, and that's a huge issue, you know, that's a problem. Let's have a look now at the S&P. The S&P, I'm long now on the S&P. Last week I was looking for a deeper wave 4, and the price did it, reversed, and I think that's it. You know, I think we're going up. My target now is the previous high. I like to accumulate SPYs, so I am constantly adding to my portfolio SPYs. I've been doing that for years, and I did it last week. I added more to my portfolio SPYs here. I was able to do it at the 374 on the SPY. You know, is the pricing, and that's great that we are seeing the price going higher. Let's see how it's going to be the New York opening today. But in terms of the medium term, or actually the price action for this week, expecting this week, I'm looking for the price to cross the 39.64 and break out for the first time ever the 4,000 area. And then I would like to check if the S&P is able to stay above 4,000. Key milestone on the price, key resistance, and then will be acting as a strong support once we are above the level. All right, traders, that's the plan for this week. And now I want you to visit ElliottWaveStreet.com. Let me show you. On ElliottWave Street, you can find our education courses, our membership. You can click on the membership and take the 30-day trial for just $19 on the Forex Index stocks or the full access. You can pick your favorite, and you will get daily updates with charts, with videos, and more. Please have a fantastic week. I'll see you inside the membership. Don't forget to sign up also to the free course, link below the video. Take care. Bye-bye.